All right, I think we're live, ladies and gentlemen. We are live once again. We got a new, we got to work on the lighting. We got to work on the lighting, but guess what? We are live, baby. We are live. You better believe it. We'll let everybody join up and get in here before we start, but I gotta say, good afternoon, ladies and gentlemen. What a beautiful pullback we had. I thought for sure we were gonna continue at least to the 10-day, but I was wrong. Let's go ahead, we'll give this a quick little second here, make sure everybody's up and running, things are running smooth. We need our blessing from Dan, Bob, Dan, to make sure the sound is working. Make sure everything is going just smooth as can be. So we'll see here, we'll see how it's going. Let's go ahead. There we go, I can hear myself now. Here, let's mute that so I don't have to listen to that. All right, yeah, what up? Oh, that's my son, David Worrell. What's going on, buddy? He's gonna be listening. He's gotta listen. He's gotta listen. He's gotta learn, you know? But all right, let's get this thing started. All right, we have an awesome watch list for you tonight. I went through, cleaned up my watch list. We made sure everything was looking good. Everything was looking peachy. We got some lo-fi music playing in the background. Everything's happy and healthy. We already got 8 of you in here. We got a poll going, of course. We got a poll going. I just want to know what you guys would think. It's a pretty general question if we're going to go higher or lower tomorrow. It's pretty simple. Green, we go higher, or red, we're pullback incoming. You know, me personally, well, I'll wait. I'll give you my my little transcript there, what I think. We're drinking out of the cowtail cup today. I don't know about you guys, if you got cowtails where you were at, but when I was growing up, we always had cowtail cups in my house, and my local gas station had some of these, and I asked if I could have them. They ended up giving me 2 of these cups. I don't know. They're great ice water cups. See, we got a tail for a handle. I don't know. It's the simple things. All right. Things are looking good, guys. Jimmy Bright's here. Let's go. Be Stewie. Muley, what's going on? Muley's here. Robert's in the building. What's going on, Robert? Dan Bob, the greatest moderator alive. David says, green, baby, green. All right, well, let's not wait any longer. Let's see what we got going on. Jolene's in the building. What's going on, Jolene? I tell you what, guys, we're growing very, very fast. We got another 5 subscribers today. And, you know, I appreciate everybody being here. I think the biggest thing, I was looking on my phone today, and we were looking at just how fast we were actually growing. We're going to have that 1,000 subscribers in no time. It's not going to be any time at all, guys. I know you guys all believe in me. I believe in me. The whole crew, you know, Covey, Dan, Bob, Dan, Predator. I mean, everybody that works so hard to keep these things going strong. We all believe in this channel. And I want to say thank you to all the viewers. I want to thank you to each and every one of you, because Yosef's in the building too. Man, Mo Wealth is here. We got a full house tonight, guys. We got a full house. Yeah, this is absolutely incredible. So, you know, without any further ado, let's jump into this. But I just wanted to take a quick second out and say thank you. I appreciate you guys. We're working really hard for this channel, and we got a new webcam. We're getting some new lighting, so I'll be nice and bright, and you'll see all the pimples that are on my face, and we get a lot of good things to come. So thank you guys. Yeah. So let's hop into it. We'll go over the S&P 500 and give you my thoughts. So if we look at the daily, we know right away, right when we see this damn thing, we hit new all-time highs yesterday. We had a good CPI report, right? We had the FOMC meeting. We had PPI come out that was way lower than expected, right? And the FOMC meeting, he said the exact same thing he's been saying, right? There's only a few things that I found that were a little different during that, and we reviewed all that yesterday. But he's talking about, you know, the job labor. What I thought was the craziest thing was the wage increase is what's holding inflation up still. The wage increase, you know. How do you fix something like that? You know, we're gonna have to see a decrease in other areas, because I don't see the wage increase coming back down, you know. But it might with the more people back to work. There might be less competition for those jobs, so they'll have to pay people less, but we'll see very soon. So with all of that being said, though, initial jobless claims was higher, meaning economic contraction is setting in. We're paying less for items. Less people have work, so less people have money to spend on that. So yeah, here we are. New all-time highs at 544.12. Today, we had a nice pullback this morning. If you guys want to look at the daily, you can see we had a beautiful pullback. Let me put this in the 5-minute. We had a beautiful pullback this morning. I really like this pullback. I was expecting to get a little bit of a pullback. We got a big launch up this morning after we had that data that came out this morning. Let me just take a look. I'm having a brain fart. Today, that was the initial jobless claims. Yeah, that was today. So we're going to be going over in a little while what is going on next week. We'll go over exactly what's going on and what the hottest data is. And we'll go over it multiple times, but tonight I think it's pretty important because tomorrow there is no economic data. So that initial jobless reports came right back to those all-time highs, and then we just scooting boogied right on back down. We went through the CPI data, open from yesterday, and came right back down, and then we bounced right back up. That's what I like to see in a strong market, a big sell-off in the morning, and then it pops back up. So what we want to see, the best overall scenario, in my personal opinion, would be for this to move sideways. All right, we can get rid of all of this junk right now, and we'll leave this. That's the most important one, and so is this, okay? What we want to see is this 10 and 21-day moving average to kind of slowly move up and grab a hold of this. Instead of all of this crazy volatility whipsawing back and forth, the best thing we want to see is a gradual, some sideways action, just like we see in here. Okay, now we got some whipsaw. We did get some whipsaw here, but we want to see this gradual sideways action to let these moving averages catch up. This is what we want to see. Of course, we're not hoping or expecting a big pullback like this. We would like to see, even if it was a gradual pullback, to meet this 10 and 21-day moving average so we could have a nice steady incline like we did right here. This is a nice gradual steady incline, a bounce off the 21, a bounce off the 21, gradual incline. Okay guys, that's what we're looking for. We had the bloody 6-day sell-off, a huge rip, another pullback, and then another, this was pretty gradual, but this is another huge rip. All right, so even if we did get a little whipsaw action, that's okay. It's okay. We could pull all the way back down to this 21-day moving average, bounce off this new base, and continue to head higher. So I'm not too worried about this at all. I mean, there's really nothing to worry about here. Okay, so I like the SPY. It's definitely looking really well. Let's look at some of the other heavy weighted stocks like the QQQs, the tech heavy QQQs. Extremely extended here, guys. If we look at the data at all, anytime the 10-day moving average is that extended, let's just take a reading here. Off the 10-day, where it's sitting right now is 2.46% off of its 10-day moving average. So if we come down here and look, the highest one I can see is off this 10-day. We were 2.96%, right? And then it held off at that 2.96 for a while, and then gradually traded sideways, bounced off the 21 and headed higher. So when we get this extended, the best thing that we can hope for is some sideways action for it to carry it on higher. But as you guys can see, anytime we gap up or move up higher and hold that area, we always pull back. We always pull back and retest. So keep that in mind when we see this huge push to the north side. What do you think? It's like a rubber band. It's getting stretched, and then we get pulled back here, okay? We get a pullback here. So I'm saying best case scenario, we trade sideways, let these moving averages catch up. The other scenario that we would have would be to pull back and then bounce, okay? That's probably the most likely scenario, okay? A pullback and then a bounce, but we will see what is to come. The IWM, this is the small and mid cap, okay? The small and mid cap. This here actually came down and stayed, well, actually broke down for 2 days. It came back, and then it traveled underneath this 50-day moving average. We don't like to see this. We don't like to see a lot of volatility come in here. We don't like to see this trading below the 50-day moving average. So that is a warning sign. We were happy and hopeful when it was trading up here, but it pulling back down now is not looking too formidable. Let me see, I don't have my clicker. Let me turn on this light really quick, guys. Bam, we gotta get some light in here. It's going on? It's dark and gloomy. We'll get some light on my face real soon here, guys. Don't you worry about none of that. I see you smashing that love button. I love it. I love you too. I love you too, baby. So let's look at the RSP, and then we'll look at a few other factors to see where the overall stress is in the market, okay? Because we know that there is a little stress, or we wouldn't have gotten such a beautiful pullback today. Well, the S&P 500, it's nothing to worry about, but there's other areas that is giving me a little worry. Now look at this. Look at these wicks off the bottom. That's nice to see because it looks like there's buyers down here. This is the equal weighted S&P 500. Woo! This means right here that it's equally weighted. So let's go ahead and look at the market watch list. You'll see right here, this is beautiful, right? This is beautiful. This is everything that we have in the S&P 500, okay? This S&P 500 is not equally weighted though. You can see communication services. Look at these big honk-a-tonks right here. Google just taking up communication. Look at technology. Information technology takes up this whole section, guys. This whole section, NVIDIA, Microsoft, Apple, okay? It's dragging the market up. NVIDIA, Microsoft, Apple, AVGO, they have been dragging this market up along with LLY and Tesla, but they are dragging this market up. So that being said, we want to see where is the rest of the weight. The RSP makes it equally weighted. If we can see this continue to pull up and continue to stay above this trend line and this 50-day moving average that is curling down, then that's a good sign. But right now, there's still a few issues out there. There's still a few issues out there, okay? Now, I like to look at the VIX. This is the fear index, okay? Now, when we see fear in the market, we see selling in the market. I'm not seeing a lot of selling, okay? We're not seeing a lot of selling in the market when it comes to the VIX volatility index. We're all the way down here. All the way down here. We haven't seen these lows in a while, guys. That's beautiful. Look how low we are, okay? That's what I like to see. I like to see the VIX nice and low. Let's stay low and just travel sideways. Maybe a little blurb here and there to give us some good trend lines to be buying back into. All right, so I like the VIX down here. It's looking good down here. Before we carry on, do we have any questions with that, guys? We have a beautiful pullback in the S&P 500. We have a beautiful, beautiful pullback. And when I say beautiful, I mean it barely pulled back, guys. You know, when I think of a pullback, I think of a pullback. You know, I think of something like this, you know, or like this. But really, we just dipped our toe in the water and bounced right back up. I mean, it's a strong market. It really is. But on the same hand, you know, with everything that's going on, we're extended, and there's no point in trying to deny the extension, okay? Mo Wealth says, I was listening to Powell's speech this morning. It struck me that most of us could benefit from his data-driven approach. He doesn't want hints from the data. He wants that data to scream at him. And that's very true. A big thing with Powell's data, though, is that Volcker, the previous Fed chairman that had to go through very heavy inflation, just like we have had to go through, when he went through this inflation, he wrote a book, and it was about staying the course. The reason for that is because if you get outside influences and we end up lifting the rate or having rate cuts sooner than expected, there's a big issue there. That means that inflation will come back. It's like this hidden kind of thing, you know? So he wants the data to scream at him, to say everything's gonna be fine. The biggest issue, the reason why people are arguing on the other side, is because if you hold rates too high for too long, you start to break things like the banks. You start to ruin the jobs, right? Nobody will be able to find work because nobody can borrow money. Companies start to fail. People start to lose jobs, right? And when people lose jobs, then they can't buy anything. If people aren't buying anything, then companies start to fail. So there's a beautiful balancing point in there that he has to do. And it's crazy, you know, it's crazy to think, you know, everybody gives this man so much shit, you know, oh, he doesn't know what, you know, he's just holding it up, you know, there's an agenda. Well, you know, there might be an agenda, but from my point of view, you know, I see him doing an amazing job, and not just that, but he's been actually telling us his plan, and he has not surprised us the least bit. He's taking each piece of data, whether it's a big piece of data or a small piece of data, and he never has overreacted to that. Never once has he overreacted to that. And he states that too. He doesn't want to overreact to good data because then he might cut too soon. And he doesn't want to overreact to bad data because he might, if he raises rates too high, he's going to break things. So he's leaving it at that 5.5 for a longer time, which is kind of right there in the middle. So things are looking really good right now. When it comes to that data, we're seeing a lot of economic contraction, but we're still seeing job growth, right? You can see that the unemployment data that came out and the initial jobless claims, they're kind of arguing with each other, where we're showing a higher unemployment rate, right? But we're showing, we're showing there's a bigger demand for jobs, but there's a higher unemployment rate. So it's going to kind of teeter-totter and go back and forth. And remember, all this data is always a month behind too. All right. Now, speaking of data, we can go into that, but before we do, well, we got 16 of you in here. You know what? We already got 14 votes, guys. I love to see that. 14 votes, 16 people watching. Do me a favor, smash this like button. If you haven't already, hit that subscribe button. Let me know if you did, because you'll be that 870. We are so close, guys. We're about 130 away from finally reaching that 1,000 subscriber goal. I know we're going to make it there. I really don't even need to be asking for subscriptions anymore, but I think it's great. I think it's great that we all have a common goal. You know, I do everything for free. We have a Discord. We meet every night at 9 p.m. for free, and we all get together. It's absolutely fun. We're all trying to train our minds to see those trend breakouts, those base breakouts, so that way we can all trade the same. If we're all looking for the same thing and we all fight to make sure that we become the best traders, sure enough, we eventually will be, okay? So make sure you hit that like, hit that subscribe for me, and vote on the poll. It's fun. Right now, we got 100% of you saying we go higher. Come on, you got to have somebody that's saying we're going to have a pullback, especially after how extended we are, guys. Come on, 100% say we're going higher? Holy shiitake mushrooms. You're going to make me short because I'm a contrarian at heart, you know what I mean? You're going to make me short the market, y'all. That's some good cowtail water. All right, guys. Now, since we were talking about data and we're going over all the data, I think now is probably the perfect time to bring up this economic calendar. All right, so we'll just look at tomorrow so you guys have an understanding. So today, we'll go over today. Initial jobless claims came out lower than expected. All right, so that means that less people are filing for unemployment. Okay, that's actually a good sign. That's a good sign. It could be a bad sign, but the market took it as a good sign. The real good sign here is the PPI, right? And we'll just stick on initial jobless claims for just a second. So why would people having let's start over. So the previous is 229,000, all right? The forecasted was 225,000. That would mean less people are filing for unemployment. Why am I saying the initial jobless claims being higher is good, right? It's higher than expected. That means more people are filing for that unemployment insurance, okay? More people are filing for unemployment. It means less people have a job. Well, that means less people are spending money. If less people spend money, then there's less demand, there's more supply, prices come down. That's inflation. And you're seeing the inflation right here. It's coming down right here. And then you got your producer's price index. This producer's price index was lower, okay, by negative 0.2%. We were only expected the forecast at 0.1%. It came in much, much lower. That's a very beautiful sign. So let's see, Jolene, like, subscribe, and we got to put some comments down there. Yeah, baby. I like that, Jolene. I appreciate that. Thanks, David. I appreciate you, son. Thank you very much. So yeah, guys, so initial jobless claims, let's look at the PPI. So producer's price index. Now look at this. See, this is a negative reading. It measures the change in prices of goods sold by manufacturers. It's the leading indicator of consumer price inflation. That is why we initially had a huge pop, right? So CPI being lower and then PPI being lower. Next thing you know, the market said, hold my beer, we're going higher. Now there's sellers up there at the top, because if we just continue to go straight up, I mean, it literally climbed all the way up, back up here to 543 in the pre-market. And then it got sold off hard. But if we go straight up, guys, that's gonna be bad, because then we're gonna come straight back down. All right, so The initial jobless claims came out showing that less people have money to spend, which is going to be great for inflation. PPI came out lower than expected, meaning your price of eggs is going to be cheaper. Congratulations, you can make scrambled eggs for the low price of $100 still. All right. Now, we have tomorrow. We don't have much going on tomorrow. This is the Fed Monetary Policy Report. Sometimes when it comes out, we'll just click on it so we can actually give you the verbatim. But sometimes when it comes out, if there's a change in in what has been stated in the FOMC meeting, there might be it might be a little bit more volatile. But let me read this to you. The Federal Reserve Act requires the Federal Reserve Board to submit written reports to Congress containing discussions of the conduct of monetary policy and economic developments and prospects for the future. So basically, they're just submitting something saying what they plan, whether it's what they plan to do or what they have done or what they have learned and what they understand from it. Okay. So that's what we have going on tomorrow. It really shouldn't be too volatile. It can be if they have changed their mind. I would say the only thing that has changed from the most recent data, PPI, is positive news. Because if we look at July. This is the first time in July have we had a higher reading for a quarter of a rate point cut. Now let's look at September, guys. This is what's juicy. This is what's juicy, guys. Okay, in September now, we're up to a 60.5%. The highest I've seen this was 62. So it's looking more likely that we are going to come down a quarter of a rate cut in September. That's a very, very good sign, guys. If we come down that quarter of a rate point in September, I do think the market's already pricing it in. So I think once the monetary policy starts to get cut, I do truly believe it's already priced in right now. Okay, we've been heading up since the October lows of 2023. I think this monetary policy is being priced in. But, that being said, we're still going to be on a bull run because there's still price cuts for the future. Here's November. Look at this. We're 48% chance. We actually have a 29.1% chance to actually be a half a point lower at that time. Okay, to be there in November, we are very unlikely to be there in November. Okay, so September is still looking good. I've been saying it. Bob will tell you from the start, September is my goal. That's where I think is going to be the cuts. I think they're going to hold until September. In September, I think we're going to start to see a quarter of a rate point, if not more. But I think in September is going to be the time that we do that. So with that PPI index, we're up to a 60.5% for a quarter of a rate cut in September. So that looks really, really good. Now, let's take a look at next week. So next week, we have core retail sales, which, it's not, it will cover it, but it's not that crazy. Retail sales, not that crazy. United States Juneteenth, I don't even know what the heck that is. It's a holiday for people who have been in office for 100 years, so they get a holiday. Initial jobless claims. Now, this is always pretty adamant. Every time we get this, every week when we get this and it comes out, you always can bet your bottom dollar at 8:30, there's going to be volatility in the market, especially if there's a big change, okay? So the initial jobless claims come out. Norman Conklin says, historically, interest rates are not even that high. People were buying houses with 19% mortgages in the 80s. Powell is doing a great job pulling off the soft landing of the market at record highs. Yeah, I'm glad you brought that up, Norman, because if we look at inflation, because we like to go over this data, if you guys look at inflation way back here in these days, it got really ramped up. Interest rates are not even that high. Yeah, they're really not. Yeah. So like back in 2006 here, we had, I'm sorry, I'm looking at the inflationary data. Excuse me. I'm sorry. We'll let that cook. But yeah, I always go back to this because we had this huge issue with inflation because in 2007 it really ramped up, and then once Volcker had to increase those rates extremely high, you can see it did an amazing job pulling back. Was this Volcker in at this time? I don't even really recall. Was that Volcker? Actually, let me just look. When was Fed Volcker in office? Volcker in office. I could be completely wrong. So 1979, 1987. Okay, so this book that he wrote was during these times where the inflation went absolutely rampant. What I really should do is a deeper dive on Volcker, because I talk about Volcker and I really don't know nearly as much as I thought. So we'll have to do a deeper dive on that. But yeah, when we look at inflation, I always compare it to 2007 and 2008, and then we get down in there. But yeah, Norman's right. Historically, interest rates aren't even that high. And they aren't that high currently, right? And I truly think that he's doing a great job as of right now. I mean, we haven't seen what's going to happen in the end there, guys. You never know. It could get bad. It really could. But as of right now, we're not seeing crazy inflections. After all the money that was printed, you know, he's doing a great job using his tools of monetary policy to try and bring down that inflation. And we're slowly starting to see it come down. So yeah, buying a house with 19% mortgages in the 80s, Powell is doing a great job pulling. So people were buying houses with 19%. Are you talking about an interest rate of 19%? They were buying that in the 80s, Norman? Let me know if I'm reading that right, because that's pretty crazy. I'm gonna have to watch the video on that tonight. People actually buying houses with 19% interest rate. Is that true? Is that what you're saying, Norm? That's nuts. That would be crazy. But okay, let's get back into it, guys. So next week we have Juneteenth. We have initial jobless claims, and then, well, that's pretty much the biggest thing that we have. The Fed monetary report again is coming out on Friday the 21st. So yeah, he said yes, sir. Okay, cool. Yeah, that's crazy. 19%. Could you imagine buying a house with 19%? I was like grumpy because mine was at a 5% fixed and 8% in 96. See, I got mine for a fixed interest rate 11, 12, 13 years ago. 5% fixed interest rate. And you know what they said? They said you can lower it if you miss a payment, but I never missed a payment. I had a buddy who had a 5 or 6%. He missed one payment, called back in, and under the like Obama Act or whatever it was, he actually got his lowered to 3.1%. It's just nuts, guys. It's nuts. You know, it's a game you got to play, you know, and right now people are pretty grumpy about it being as high as it is, but yeah, it's really, he's doing a great job. And, you know, I really appreciate you bringing that up, Norm. You're going to have me thinking tonight, brother. Absolutely beautiful. So next week, nothing too crazy. Nothing too crazy. The core retail sales can get a little, you know, volatile, but it's these initial jobless claims you really got to watch out for, okay? So keep that in mind. Nothing too crazy going on for next week. Now, we went through the S&P 500. We talked about the extension on the S&P 500, and we want to go over my watch list. Now, I have quite a few here. I'm going to show you guys what I have on my watch list. Or should we let's do my trades. Let's do my trades. I want to show you the trade that I took today that I sized up on a little too much today. And then I'll show you the trades that I'm still holding, okay? Now, it was BNAI, okay? I want to show you the mistake that I made, and I want you guys to learn from it, because remember, you are a loser unless you're learning, okay? And I learned a little something today. It's something I'm still working on. I'm not mad about this trade. I'm not mad at all. I'm glad that I took the trade, but why am I going over this trade? Okay, because I oversized in this trade, okay? I know AI is hot. This is a 43.5% ADR. I'm looking at this thing just as you guys know. This is beautiful. For 43.5% ADR, this thing could really run. We got volume on deck right here, okay? Look at this beautiful volume coming in here, right? Over 108,000 shares traded, and then a couple days later, another 67,000 shares traded. And then look at this, it creates this beautiful trend line, boom, bouncing off a 10-day moving average. This is what I wanna see, okay? Now we can go a little deeper into this. We can bring up my trader view, which guys, if you guys want part of this trader view, you get a week absolutely free on me. If you guys click the link in the description, this trader view is absolutely beautiful. So I think it's BNAI, and it's actually free completely. You don't have to pay for it. But if you want more things, like if you want to add more indicators, I think you only get 1 or 2 indicators. But if you want more indicators and to have more like in your watch list, so you can switch this with more, then you have to pay. The essential plan's cheap, guys. It's really cheap, but you get the first week free on the essential plan on me. Okay, it's just a little thing that they gave me for promoting it. Okay, but again, you don't have to. It's absolutely free. You can still click on the link. You can still get it for free if you want to be a part of this, okay? Now look at this, BNAI, look at this RS rating, it's 9. It's absolutely garbage. That's the first issue with this, but when you're looking at these small cap, these low floats, you can't worry so much about the RS rating if we have volume to back it up, okay? You guys won't hear me say that often. I don't preach these, I don't point these out to you, but I want to show you guys a losing trade because I show you all my winners. Every day I'm like, oh, I'm up 1,000 here. Oh, I'm up 500 here. I want to show you guys I lost around 3. Let me take a look. Let's bring it up. Let's bring up the active trader here. $350 loss today. Okay, now usually I'm only willing to risk between $100 and $150. I got a little excited today, guys. I got a little excited on this trade. I really like this breakout. I really like this breakout, and I seen volume too. So let's go ahead and zoom in on the 5-minute. So it's absolutely perfect. Here's the volume. It's nothing too crazy, but this was high enough for me where I wanted to take it. And look at this hourly trend break. I would take this 1,000 times over. Look how clean this trend and this trend break is, okay? I took it, and I'm happy that I took this trade. Okay, the issue is I oversized in this trade. I oversized. There's absolutely no reason for me to have taken a $350 loss, right? It absolutely was very important for me to not lose nearly as much money today because I expected a pullback, okay? So I gave back a little bit to the market today. I gave back twice the amount that I wanted to. Now, $350 isn't nothing. It's a drop in the bucket, right? But if we just let these pass, if we just act like that these are A-okay, those add up, guys. 350, 350, 350, it just keeps adding up, right? If I only wanted to take a $150 loss, that's all I should have taken, all right? So it is what it is. I'm happy to go over it, but I am not happy for what I did on sizing up too much on that, okay? Now we will go over what I'm currently holding though. We have AMRX, we're still holding that. We're up about $42 on that. It pulled back wildly today in the aftermarket though. It looks like it's popping right back up to those all-time highs, but I don't really care about the pre and aftermarket. We're gonna see what AMRX wants to do. This is my last trade I will ever take at 3.5% ADR. I will only be taking trades for ADR and higher. I don't care how good the setup is. That's just where I'm going. I'm getting more discipline as a trader. No more trades that are that low. Absolutely not. There's absolutely no reason for it. If I want to grow this count and I want to grow it fast, I'm going to be in trades that are higher than that. And here is a trade that's higher than that. At 5.1%, I actually sold another piece of ANF. This will be the last piece that I sell off here. Okay, this is where we got in, and I'll just blow this up so you guys can see this. This is the hourly. The gray areas are the pre-market and aftermarket, okay? Yeah, 100% Mo Wealth. I absolutely have BNAI on my alert. If it goes again tomorrow, I will be risking $150 at the low of the day. I will 100% take that tomorrow. I love BNAI. Okay, I love this setup. I don't care for the stock, right? It's at 9% relative strength, right? It's not like a top, big seller. It's not an Abercrombie and Fitch, okay, like we're looking at right now. This is, an RS rating much, much higher. We could actually take a look at that. So ANF is sitting at an RS rating of 99, so it's as high as it can possibly get, all right? But BNAI is like an RS rating of 9, so it's not, it's not, but it is 43% ADR, so I'm willing to take that trade-off, okay? Not what I teach, but it is something that I practice. So ANF now pulled back today, but here's the great thing. So I expected a pullback. This is my biggest holdings. I actually bought, I'll 100 shares down here at 171, and we're sitting at 190. So you do the math on that, okay? That's quite a bit of money that I've made just in 3, 5, 6 trading days. 6 trading days. You know, people don't make that, you know, work in, you know, 3 months. Some people don't make that work in 3 months, 4 months. I made it in 6 trading days. But when we initially popped up here, I ended up taking 1/4 of my position where this white line is, and another 1/4 of my position where this white line is, and that was at market open because I expected a pullback. We got that pullback today, and you can see on the last half of my position, I'm up $946 on, so it's looking pretty good. Now let's look at the daily so you can see the average, the 10-day moving average. So here's where I bought. Here's the 10-day moving average. So my last half, I cannot lose money on it. I cannot lose money on it. This trade will forever be a winner because if it comes back down, I will not even break even. I will close when it closes below that 10-day moving average. All right, so it's looking really, really good. So I like ANF still. ASTS surprisingly continued higher today. Look at this daily, guys. Now, why did ASTS move higher? Well, as you guys remember, AVGO. So AVGO, rip tater chip to the north side on earnings because it had huge expectation beats. Wall Street was taken by surprise. This thing ripped higher. It had a pullback this morning. People are taking some profits. Plenty of volume up there. I think this thing could possibly go higher, but this is in the communication sector. ASTS, it's in the communication sector. So I expected this thing to go higher today, and it did. Well, I'm sorry. I expected it to go higher yesterday. It did, but now we're so extended from the 10-day moving average. I expected for us to get a pullback, but this thing is looking very resilient. It keeps looking like it wants to set up, move higher, set up, move higher. Now it looks like it's setting up again to move higher, but I don't trust it. I'm not going to add in. I've already added in, you know, right here, 900 shares, took off 300, 300 more, held on to 300 throughout all of this crap, and then added another 100 right here. So I have 400 shares of this. We're up $720 on ASTS, and I'm willing to let this thing continue to work, okay? FSLR had a huge pullback today, giving back about $89. We're still up $98 in FSLR. I'm just letting this thing work. It's trying to breathe right now. We had this trend breakout. We bought the trend breakout. It's working. We're gonna let this thing work. If this thing wants to get down to my break-even area, I'm gonna let it kind of teeter around there for a little bit. It's gonna be, it'll be just kind of like, how does this thing close? Because I'm only holding 10 shares, okay? If it closes well and maybe sets up another trend up here, I might add to it. Originally I had 100 shares and it didn't work out for me. I kind of got spooked out and it closed out below this low and came right back up. I added back into it on my second trade at the same price. I reduced my share size. So we're only 10 shares into that, okay? So let's see. Yeah, so FSLR, that's what I'm playing. We have NVDL, which is NVDA. We're up $707 on the last 1/8 of this position, guys. 1/8. That's what's nuts. That's what's nuts. I am down to my last 1/8 of this position. It's nuts, guys, because, and I was talking to Danny about this, you know, because I want to make sure that my position sizing, where my sell-offs and stuff, you know, I asked him, because Mark Minervini actually sold out. I want to say he sold out like right here, okay, right in this area. He sold out. And I held on to this. Actually, I think he sold out back here, if I'm correct. But anyway, I told Danny, I was like, yeah, you know, I kind of want to sell out too. This thing's extended, you know, and he goes, Dave, what's your game plan? You know, and I told him, you know, the break of the 10-day moving average, that's the game plan. And he goes, okay, well, you need to hold on to this thing. So I ended up selling a little bit more out, but the thing is I should still be holding half of my share size. That's what Christian Quilamagi does, and I follow a lot of his rules and his teachings. Okay, so if you don't know who Christian Quilamagi is, check out our resource page in the Discord, okay? Christian Quilamagi is an amazing trader, and you guys need to understand. We actually did a study on Christian Quilamagi. You can find that in my videos as well. I should throw that up in the interview section. But anyway, we're up $132 just on that last 1/8 of a piece today, 707 total, so that's looking good. And then, of course, we have our long-term trading accounts that we just started for the YouTube channel. This is the VOO. We did this right here on the pullback. You can see all these green lines is where I bought in. I told everybody when I was buying in as the market pulled back on this bloody 6-day sell-off, we got in twice down here, and then we let it ride. And as it came all the way back up to this top, when it broke those new all-time highs, we got in 10 shares. We're holding a total of 16 shares. We're up $341. This is the long-term investing account, okay? So, yeah, Dan Bob's got that up in the chat. Dan Bob put the Discord in the chat. So if you guys want to join the Discord, it's absolutely free. You're more than welcome to join us. We meet up, we talk, we do it all. We do it all in there. The resource section's got everything in there. My trend breakout strategy, the base breakout strategy, Covey's base breakout strategy, the episodic pivot strategy that we focus on. We talk about a watch list every night at 9. You guys are more than welcome to do that. He put that in the chat. And of course, guys, look at my screen really quick. Make sure you click this live button. If you're all the way back here and you're watching all this bullshit still, I want you to click this live button right here. And, oh, actually, you can't see it on the screen. Let me bring it over here. You want to click this live button right here next to the sound. You want to click that live button, and it'll bring you right to the front. So that way you're always live. And then, of course, smash this like button. Let's see how many likes are we up to tonight. Let's do a refresh on this page. Bam, 18. Let's go, baby. That's what I'm talking about, guys. We're really heading on up. We're starting to beat our lives every night, man. And we're up to 870 subscribers. Congratulations. I would love to know who you were. Who's the 870 that subscribed? I'm very happy we got to achieve 870 tonight. So make sure you hit that live, hit that like button, and hit that subscribe button if you are not already a part of this amazing team. And of course, we have the Discord in the chat. And you know what, Dan Bob, while you're posting, post the Facebook, post the Swing Trading Facebook for me in that live chat. We have a new Facebook group. You guys are more than welcome to join it. Dan Bob is moderating it. He's doing an amazing job. He's bringing up a lot of questions, a lot of thought-provoking questions in there. And I would like you guys to be a part of that too. So, ladies and gentlemen, we did the vote. And before we actually go into the watch list, because that's what we're doing next. Your watch list. We'll do this in the last 15 minutes. Your watch list is coming up right now. But the vote, we voted today. We had 18 people vote. 94% said we're going higher tomorrow, even on this extension. And only 6% of you saying we're having a red pullback day is incoming. Well, I have to say for myself that I do think that we are going to pull back. I truly believe that, but we always like to review these later, okay? If you guys think we're going higher, then we might be going higher. So that's absolutely perfect. I'd love to see this thing continue higher, of course, but I much rather see it trade sideways. I think that's the safest thing, and maybe I should have put that in the poll as well, that we just trade sideways, because that's what we need to happen. That's what we that's what we need to have happen, guys. We need to see this thing trade sideways. All right, let's go through the watch list. Let's do this. FSLR. We have FSLR here. It's on the watch list. We're going to keep it on the watch list. There's not a play in trade right now. We're going to look at everything on the daily, guys, and everything that you see tonight is going to be a higher ADR than 4%. If it is not, yes, we are optimistic, Robert. I love being optimistic, but I think it's safe to say, because we're not bearish here, right? We're not being bearish, but it's safer to have a better understanding that we're going to trade sideways, right? That's a safer alternative than the continuing higher, because if we keep continuing higher and stretching that rubber band, eventually it's going to snap back, and that's when a lot of traders get hurt. So keep that in mind. So we have FSLR. There's not a trade on it, but I think if we see more pullback, we might be able to see a new trend break set up before it takes off higher. So keep that on your watch list. We have ANF. We already talked about ANF. This thing is continuing higher. It's extended from the 10-day moving average too, and there is no setup. The trade was where that green line is, exactly where I got in on that trend break. NVAX. So if you guys remember NVAX, last Sunday? I think it was 2 Sundays ago, I brought up NVAX when it looked like this, okay? And it broke out to the north side. A few of you got it. I remember the day it broke out right here. I was actually in the doctor's office. I couldn't play it. I'm happy that you guys, I'm happy that a lot of you guys in the Discord took this. I was very happy because I couldn't take it. You know, so I was happy. I know B. Stewie got a piece. I know Danny got a piece. I think there was a few others that actually got a piece of this too, but we called it out. I remember I was in the doctor's office. I called it out. I said, I can't play it right now. You know, I can't see the volume very well on my phone and stuff. And it's just, you know, I've got to stay disciplined. So this thing took off. Beautiful trade. This is why we take profits. Excuse me. This is why we take profits, guys. On the way up, you're going to take half out, whether it's a quarter out after 1 hour or 2 hour, you take another quarter out after it's, you know, 4 or 5 hour, and then you let the last half ride. That last piece came all the way back down and stopped you out at $16.95. You might say, well, Dave, why wouldn't you take out up here at the top? Because you don't know it's the top. What we're trying to do is catch those big movers, those big pushes. All right, so let's continue on. ONON. So ONON is sitting up here at this top. It looks like it formed a small base and then started to break out, okay? Small base started to break out and it pulled back to the 10-day moving average. Now, I don't see a trade on this just yet. You know, it's kind of trending north, right? We had a few areas where we could have traded, like this base right here. You know, we could have seen it breaking out higher, but now it's just kind of trading on that 10-day moving average. I like to see that, all right? I do like to see that, but there's no trade. There's no way we can trade this right now. All right, SHIP at 5.2%. We can see that it had this pullback here and it's breaking the 21-day moving average. We have no trade on SHIP right now. Now SHIP, the play was right here. We're always gonna look at this base breakout for SHIP. It was beautiful when it happened. If we zoom in on the 5-minute, you'll see volume coming in right at the base breakout. We traded this, we played it well, and we exited right before earnings. After earnings came out, this thing continued higher, and now the pullback is not setting anything up. There's no base breakouts that look clean. There was a nice trend breakout. I remember trying to play this trend breakout, but it failed pretty quick. We got out pretty fast, and now it's heading down. So SHIP is gonna be off my list. I'm actually removing SHIP now. So it's been a while since I removed SHIP off my list, but we need to go over it. ASPN at 4.9%. It's forming a base up here at 31.58. I'd like to see this continue to form this base out, stay above this 10-day moving average, and just base out. If we set our alert at 31.58 and it goes off and I call it out in the chat room, that doesn't mean buy, it doesn't mean sell, that means watch it. And if it sets up and we see volume come in on the 5-minute, breaking this area, 31.58, 31.50, then that might be plausible for you to take it. But remember, these are my trades, they're not yours, okay? MNY, so this one, you know, this is a 6.1%. It's well below a 200-day moving average, but I just love to see these beautiful trends. I really like to see it. So if this thing can get some volume, which today I watched it, it didn't get much volume on this break. I do really like the look of it, but it's just no trade. You can't trade it just yet. We have to wait for that volume to come in. So I reset my alert at 213. If we can see some volume, I would love to, yeah, SHIP is sailing away. Yeah, I'd have to agree with you on that. We have ELF. ELF is too choppy for me, guys. This thing zooms up, pulls back, bounces too high, too hard. We're not getting any tight candles. I don't like the way ELF looks. To me, this is distribution. All I see in this is just a chop fest, right? Just like up here, look at it, chopped around, chopped around, chopped around, and then it sold off hard. This thing moved up, it's chopping around, chopping around, chopping around. I have a feeling, and I'm not sure, these aren't buy or sell recommendations, but I could see this thing selling back off, guys. I really could. You know, I mean, this is what you want to see. You want to see tightness, but you want to see it above the 50-day moving average, right? You want to see clean pullbacks and then breakouts above those pullbacks. Not this choppy bullshit. I don't like it. So I'm just going to keep an eye on it. Maybe I take a short on it. I'm not sure. Now RSI, this is a lower one, but I know the squad was watching RSI, so I decided to keep my eye on RSI, and it did break out on higher volume. It's just too slow of a mover for me, so I am going to take it off my watch list. But guys, this is a beautiful looking base breakout. It really is. It's a beautiful base breakout. This is what we're keeping our eye on. It moves up on volume, and then as it trades sideways, it gets tighter and tighter following this 10-day moving average, and it forms a range. And this one was right at that $9 area. So when it finally breaks out above it, we can grab a few shares, risking either previous low of day or the low of the day. And you can see if we would have taken this, we'd still be in this and it would head higher. I'm looking for something faster, so that's going to be off my watch list. IPW, Covey really liked this one. He really liked this trend break here. I didn't care for it. I just thought it was too choppy. I didn't see any tight days. You know, I don't know. I don't care for the look of it. Covey liked it, so we're going to keep watching it. It moves 30.8%, so this thing is a make or break your account. You need to be very careful with this. USAU, I'm going to take this off my watch list. This is gold. It is failing. You guys know I'm bearish on gold, but I'm sick of looking at this junk stock. ARM, now I know B. Stewie in the chat was playing this, and he's still holding quite a few shares of this. Look at this. We're almost back to those all-time highs. 164 is the all-time highs on ARM. Isn't that amazing? That's absolutely beautiful. I love to see this on ARM. We're going to see what it wants to do all the way up here. Yeah. Excuse me. My guess is a pullback, right? You're going to see profit taking up here, a small pullback. But if we get a big cup and handle, let's look at the weekly. We might get this big cup, you know, big cup. It's not that clean. It's not that clean at all. But we had a big trend break on it. I know Awesome Art was talking about this trend break earlier today. I think it was on ARM that she was talking, or maybe it was SMCI. Let's take a look at SMCI. Yeah, SMCI had that trend break over here, but you could also call this a trend break too. All right. You could kind of call this a trend break. It's not that clean, but it is a trend break. You could have played this trend break. I noticed a trend break today. I didn't want to take it. I thought this was the trade, and now it's just kind of doing its thing. If you look at SMCI currently right now, it's kind of a lagger, right? If NVDA is moving up, MU is moving up, those seem like leaders, as you know, SMCI just kind of came back down. You know, it's just now starting to move with NVIDIA still ripping higher. NVIDIA's the leader. SMCI just seems more of a lagger, but it also moved up very high, very fast. So it's still digesting some of these levels. So that's just my thought on those. PAAS, this is the silver mining company, moves 3.8%. This, I told you guys I was bearish on silver, bearish on gold, and I just couldn't find a good spot to get in. In hindsight, sure, plenty of great spots. But I just, you know, I didn't have the cojones. RSKD, this is a slower mover. It's gone. SG, so SG, I'd love to see this thing start to set up, but we're not seeing too much going on here. I believe the real trade was right here, but like I say, earnings kills everything, guys. Earnings kills everything. Kava. So Kava created this beautiful trend line as well. It broke up above it, and now it's riding that 10-day moving average, so no trade on that. Now Wix, I found Wix to be very interesting. It moves 3.9%, so it's just below that 4% that I want. Beautiful earnings, trend break, and now look at it. It's forming a new trend, so put this on your watch list, guys. WIX for a trend break. I'd love to see this hold this 10-day moving average, break above it on volume, and maybe continue higher. We have ENPH, so this is kind of a first solar move right here. Shout out to Predator. So this ENPH right here, if we can get above this area in volume, you know, you guys can just look like right here. It's not the cleanest, but you got 1, 2, and 3 tops. So if this can just start to hold a 10 or a 21-day moving average and bonk its head, I think it's a leader to FSLR, but it's definitely one to keep an eye on. We also have Rent. So Rent moves 18.9%. It's following this 30-day moving average. It's not doing much now. It's starting to, you know, it looked like a clean trend break here, but I just didn't trust it. There wasn't any volume. So it just looks like this thing's going to sell off. I'm just going to take this off my watch list. Some of these we don't really need to go over because they're small caps, but RBEN, I know that Covey really liked this one too. So I found this trend break right here, or somebody pointed out this trend break to me. You know, right here is the trend break, and it broke out. I didn't end up taking this, and I'm kicking myself in the butt for it because look, it held the 10-day moving average the whole time. You could say that, you know, it broke through here, but it did not close below the 10-day. That's when we're looking to close things out. So it stayed above that 10-day moving average, and it headed on higher. It's a beautiful look here, guys. Absolutely beautiful. Rip, rip, tater chip, chilling at 676. So if you would have actually taken this trend break, you would be up currently today 76.72 on your investment. So that's just nuts to say. You know, huge volume, right? Huge volume. It moves up higher and then forms this trend, breaking out even higher. Now it's just too extended, guys. That's something that we want to watch so we can learn from. Chewy. So this is one that I found interesting. We got a big rip off this bottom here. Now we have some overhead resistance on Chewy, but I do want to point out that if Chewy can create new higher lows and start gradually heading to the north side, I think if we find a base or a trend, Chewy could head higher, okay? CRDO, this thing's ripping. Now, reason why I have this on my watch list is because I'd love to see this pull back, form a trend, follow the 10 and 21-day moving average, and then we'll find another area to get in because this is a beautiful look right here, okay? All right, we don't have too many more, so let's go over these quick. CCLD, not looking good now. I'm gonna delete this one. MU, so MU broke this. This is a range. This is a bottom range and a top range here, and you can see that it is ripping to the north side, so that was nice to see. Nice breakout there. It also had this way back here, guys, way back here. You can see this big cup. Not much of a handle, but it did form a little bit of a handle and then ripped and broke up, so that was nice. But what killed it? Earnings. Couldn't get into it. GPS, so GPS, this is Gap. So we know retail trading is doing really well because of Abercrombie & Fitch. This is more of a lagger because you can see it's a lot of overhead resistance. It's not nearly doing what Abercrombie & Fitch is, but they did do well on their earnings clearly because they gapped up. Nothing too crazy. They pulled back, creating this range, and then it broke out. Now holding a 10-day moving average, this thing could still get some legs. It moves 4.7%, so it's still pretty fast. GTE had a base breakout here. Absolutely beautiful base breakout. I would love to see this thing continue. But really, guys, before we finish up, I just want to tell you, when we look at the S&P 500 and we expect a pullback, you're not going to find a lot of trades. Why? Because everything's extended right now. I mean, my whole watch list I just went through, we got a few more at the bottom I'm going to show you guys. But I just want to point out, like, when we look at my watch list, you need to understand. We are extended on the S&P 500. We're waiting for a pullback. If we can get a pullback and a bounce off that 10-day moving average, that is when a lot of these setups are going to set up, okay? So let's keep that in mind. AVGO extended, ASTS extended, RDDT. So this is Reddit. Now, I don't talk about this a lot, guys, but look at this area right here. This line that I drew out, 68.23. This is a very, very key area, okay? And I had this marked out a long time ago when Reddit was all the way down here, okay? Why? Because this is the highest traded volume average, okay? Meaning the most ever people were buying or selling this stock where this is at right now is this $68 area. How do I know? Because that's VWAP right there. That's the average weighted area, volume weighted price, okay? Volume weighted average price, excuse me. That's why I marked that. So what happens when it comes up to that volume weighted average price? You're gonna see people selling because those are where the bag holders are, okay? So keep that in mind. If we get RDDT to continue bouncing here and getting tighter and tighter, letting this 10-day moving average catch up, I think Reddit, RDDT, can have an extremely explosive move to the north side. So we really need to keep this on your watch list, okay, guys? It's not ready yet. It's not setting up just yet, but I will say that this can be extremely powerful if it does in the near future. We have MMYT. This stock is setting up. We had a huge run up and now we have a trend. So keep MMYT on your list. That's looking very good. NNE, this was brought up by Covey to me yesterday. And MMYT actually. So NNE, Covey brought this up yesterday. I love it. Danny loves it. I think you should love it too. I think you need to put this on your watch list because it's forming this beautiful trend. It's had an inside day today. It's very tight and it's squatting right on top of that 10-day moving average just above it. So I think tomorrow might be a great opportunity to go. It's also in the clean energy section. Nuclear energy, they consider clean energy. And if this thing gets to ripping, just like for solar, this thing could really move higher. So do keep that in mind. Next up is IREN. IREN looks absolutely beautiful too. This is a clean energy for your Bitcoin. So when we look at Bitcoin, we want to see Bitcoin do well, but IREN doesn't even care what Bitcoin looks like. So let's take a look at Bitcoin. I do expect Bitcoin to hold this 50-day moving average and head on higher. I'd love to see it hold this trend and head on higher, but it did not, okay? Or I'm sorry, but it is. If it breaks through this trend, it can head on higher. We want to be above this daily trend that it originally broke through. I expected this to continue higher, breaking 7,200, but it was not ready for it. It wasn't ready, okay? So I'd like to see this thing break through this trend line and get some volume, get back up here to that 7,200, maybe trade sideways and rip up higher. But IREN, that Bitcoin miner, clean energy Bitcoin miner, what a crazy push. This thing went all the way up to $15. I know that we were talking about this trend breakout down here. Look at this trend breakout. We called this out for you guys. Beautiful trend breakout. I did not play this. I know Danny made quite a few dollars. I think he was up 4 or 5 grand on this trade. Absolutely beautiful runner. He may have made even more. I'm not trying to call out of his book or anything. I think he played this multiple times. We had multiple areas to get in. We had another trend break area. On the intraday, we had another trend break area. I know some of you guys were watching, and it was absolutely beautiful to see. So SMMT, this broke out today, yesterday, and my alert went off on it today. I'm gonna just wait and see because I'm not seeing any volume on SMMT. It is in the therapeutics, which is a hot sector. If we go all the way back and we look, this is the same area that it had trouble with back in the Dizzy. So back here in April of 2021, you can see it had that same issue where it couldn't get through. So now if we come to the current time, 2024, we could see huge push up, and now it's kind of stuck trading right in that same area. So if it can break out of this area on volume, I think SMMT can be very powerful. It moves 29.6%. Mo Wealth says BRCC. He also brought up, which I think is great, the ADR is 4.82, above all moving averages, tightening up on price volume, drying up RS91, and he is giving his buy-in prices. So I really like that you are coming at me just not with a ticker, but what you think. And look at this beautiful thing. Look at this. Now this is why we have a community, ladies and gentlemen. This is the exact reason why I wanted to start this community, for people like Mo Wealth that don't waste my time at all. He says, look, I know your criteria. I've studied your work. I know what the hell you want. Take a look at BRCC. Let's get after it. That's the shit I'm talking about. Thank you so much. That is a refreshing ticker to see. BRCC is going on my watch list, and it should go on your watch list too. Thank you so much for bringing that up. We're not going to give the areas of where we should buy or where we should sell. That's totally up to you. If you guys want to know how I trade, I have that in my resource, but I do have my alert set at 618, so that way if 618 gets broken, I can keep an eye on it on the 1 and 5 minute time frames to see if volume comes in at those areas. If it does, that might be a great area to keep an eye on. Okay, so thank you for that, Mo Wealth. I really appreciate you, brother. So what else we got? I think that pretty much wraps it up, guys. Do we have any questions? I'm gonna get a drink of my cowtail water, and you guys tell me if we have any questions, because time is up. That's already an hour, man. Every time I'm like, wow, we're just gonna do a 30 or 45 minute stream. We always end up doing an hour, you know? But let's, just a quick review. We Muley says, is there any way we can re-enter IREN? So I can't give you buy or sell recommendations, but what I can say is it's extremely extended on this 10-day moving average. So if I were to get into this, it wouldn't be until it set up another trend, right? Or if Bitcoin broke out. But even if Bitcoin broke out, this is still extended. So I'd love to see this kind of form another trend. Like if it can come back down like this, you know, kind of do one of these and head back down and form this trend here. You see what I'm doing? You know, and then the 10-day moving average kind of follows it right here, gets really tight, and then this forms a trend here, and then we break out above that trend, and at the same time Bitcoin is breaking above 7,200, then yeah, that would be a great time to get into this thing, you know. But right now, I mean, you might get lucky, you might get in and this thing continues higher, but to what extent? Where are you gonna risk, you know? Like, are you gonna risk this 10-day moving average from there? Like, that's not good risk reward, you know? So I would say no, Muley. I personally don't, I'm not gonna trade this. I'm not gonna trade this till I set it up. You can trade it however you want, but that's just not how I'm gonna trade it, you know? We'll look at HALO. So Halo, yes, this is looking nice. The only thing I don't like is its low ADR. So that's 3.3% ADR. I know Halo, I've seen this thing trade before. We do have to keep in mind it's showing like kind of a head and shoulders pattern here. Not saying that you know, holds entirely too much weight. I don't really care for patterns, but if we just mark out previous all-time highs, and we won't call it all-time highs, 59.46 is, but if we mark out these areas of high inflection and we zoom in here, it's sitting right on top of that. So yes, if it breaks this trend, you know, it's forming a trend, it looks good, I like it. If it breaks this trend, that might be a trade. It's just that it's too slow for me. It isn't a hot sector for therapeutics, but it's got to really get through this $53 before it's going to become a bigger trade. New higher lows. I can't complain. I can't complain about this, Yosef. I like it, but I can't trade it. I just can't trade it. It needs a little bit more time, and it's a little too slow. Predator says, Chewy, look bad. Take a peep at the hourly. Sure, let's go back to Chewy, CHWY. So here's the daily. And like I said, you can't really, you know, it's not really setting up too much. It's not doing anything too crazy. But if you want me to take a look at the hourly, we could take a look at the hourly. Zoom out here. Yeah, so the hourly, I mean, you could go ahead and do one of these. Sure. It could break out. It's just not, that's not my look. It's not my ideal look. But yeah, you know, I see what you're saying there, Predator. And you could definitely take a play like that. You know, I could be completely wrong by not taking this play, and it might shoot up to 1,000. But, you know, it's not, that's just not the way, that's not my type of trend. And, you know, it might sound kind of silly, but my trends are kind of like this, okay? It's kind of like this angle, not a wide base. And here, I'll show you ANF. Like, look at this trend on ANF. Here's the daily trend on ANF. Look at this. It's a little steeper than what I drew. You know, I kind of want to see something like this, you know? But yeah, it's a little steeper than what I drew, but that's perfect, you know? As to where if you look at Chewy on the hourly's kind of got that, it's kind of got that wide, and it could work, don't get me wrong. Let's say Chewy, how about this? If we look at this on the hourly, it looks good, right? It looks good, but I would like to see it hold this base, continue to make new higher lows, and let's say this comes back down, makes another new higher low, another one, right? And then it breaks out, and then it takes off. So I think maybe another day, maybe two on Chewy, and then it could look better. So yeah, I do like that. I do like it. Predator, that's nice. REBN, Chewy for dinner. Rex says Chewy's for dinner. Anything's Chewy to a T-Rex. REBN. So we looked at REBN already today. I'll just go over it really quick though. We had a trend break here. This was the trade. All right, this was the trade. Right now it's extended. There's no trade on it. There's no trend, there's no base breakout. So we have to sit back, we have to be hands off, we have to wait. And why, one more time, why is everything seem so extended? Because the S&P 500 is extended. We need to give this market some time, guys. Give it some time to cool off. If you're in trades, let them work. And don't get caught up in trying to buy overly extended things, all right? So thank you guys so much for being here. Take a look at my screen really quick. I want you guys to do me a huge favor. We're gonna refresh this screen. I want you to smash this like button for me. Smash that like button, hit that subscribe button. If you guys were here from the start to the end, I really appreciate you guys. I really do, it means a lot. You're very welcome, Nylish. Thank you so much for being here. Let me refresh this page. Let's see what we got up to tonight, guys. 20, hell yeah, let's go, baby. We got 20 likes, 17 people still watching. I appreciate each and every one of you. If you're here, it's to better yourself, right? If you're listening to me, it's so that way, not only can I get the right time in, I can get the time in, I can go over all the watch lists, I can go over all the hottest sectors. It's not just for you, this is for me too, guys, and you can see the process and the routine that it takes to become a profitable trader. We're going to do this, and we're going to do this on the daily, baby. I bring you that data, I bring you that news, and I bring you live trading, live commentary, and analysis. We got the whole crew in the Discord. If you guys want to join the Discord, links in the description. Join the Facebook, the whole nine, guys. Why wouldn't you? So thank you so much, Robert, for showing up. I appreciate each and every one of you. The Facebook group is in the comments. You're welcome, B. Stewie. You know I love you guys. Absolutely appreciate each and every one of you. So we'll see you trading in the morning, guys. We'll see you in the morning, okay? Thanks, guys. Peace.